Hello and welcome to this video. Today is the 18th of December 2018. In this video, we are going to look at the pair US dollar to the Canadian dollar over here. So as you can see over here, this is the weekly chart for the US dollar to the Canadian dollar. In this weekly chart, quite obviously, you can easily see an A, B, C pattern. So down to here is labeled as A, B, and then C. So a easily zigzag pattern can be easily identified in this weekly chart for US dollar to the Canadian dollar. What this implies is that in the long run, in the long term, probably for the next 1 to 2 years, the US dollar to the Canadian dollar will go to the upside, probably breaking the previous high back in 2015 or the beginning of 2016. But we don't want to talk about the long term. Let's look at the short term. What will happen to this pair in the short term? So let's move on to the next slide. Over here, you can see the US dollar to the Canadian dollar in the 4-hour time frame right over here. What is very obvious here is some indicators that are pointing to a selling opportunity for this pair. Number one is the MACD. So the MACD indicator is pointing to some selling opportunity. Why? Because over here at this peak, if you look at the corresponding MACD and then follow up to the next high over here and the corresponding MACD, you'd see a degree of divergence happening over here. So this in the 4-hour chart signals a selling opportunity. Moreover, here the pattern that you can see over here looks like a fourth wave. It looks like a fourth wave, probably flat. What happens after a fourth wave is a fifth wave, which is underway. And after the fifth wave, we have a downward movement. So this is what I'm looking for the very short term. Also, over here, you can see the volume of the trades. Since the high that happened over here, maybe about 10 days ago, so let me clear out the slide. We experienced a high back about 10 days ago. Since that time, if you look at the corresponding volumes, the volume of the trades are shrinking, going down, down, down. So making new highs, but at the same time, shrinking of the volume of the trades. This also implies that probably the move to the upside is over for this pair, meaning that we have a selling opportunity building up in this pair, which is the US dollar to the Canadian dollar. So as you can see over here, I opened a sell position for this pair, and probably I will add much more because I believe both US dollar will weaken and the Canadian dollar will probably strengthen in the weeks ahead, probably prior to the year end. So adding a sell at this level, selling this pair, at least for the short term, is the way to go. What can also be another clue on what's going to happen in this pair? Can you guess? That's correct, oil. So what happens to oil can have a direct effect on this pair because of Canadian dollar. Canadian dollar is closely related to the price of oil, as is Norwegian krona or krone. The Australian dollar is usually correlated to the gold markets and gold itself. Canadian dollar and the Norwegian krone is usually related to oil. So let's have a brief look at oil. Over here, this is the prices of oil. This is the daily chart. So XTI to US dollar is the oil market. You can see quite obviously that from the highs back maybe about 3 months ago till today, we had a very massive significant decline in oil. What happens after a swift and fast move to the downside usually is a relief rally or a retracement. Moreover, when we look at the next slide, which is the 4-hour chart for oil, you can easily identify once more a convergence. So look at this MACD over here. If it shows up correctly, if you look at this MACD at this area, you can see we had a low over here, and this is the corresponding MACD. We had another low at this area, and this is the corresponding MACD. And just today, we have broken the previous lows, and we have a lower MACD. What's happening? A convergence. A convergence in oil, plus a massive previous decline in oil, all points to probably a retracement happening in oil. So oil will probably go up. And if oil goes up, usually the Canadian dollar will also go up. So what will happen to the US dollar to the Canadian dollar? It will move to the downside, which confirms our previous analysis. This is exactly what I refer to as cross analysis, meaning that you analyze one pair and you use other pairs, other charts in order to confirm what you have seen over here. So when oil prices go up, it can indicate a lower US dollar. Also, it can put an effect to the Canadian dollar and result in a stronger Canadian dollar. And overall, this pair will go to the downside. So in my opinion, I believe it's a very great opportunity to start selling US dollar to Canadian dollar. So I just have started and put some sell orders, and as it goes up, I will add some more. And more likely than not, I believe in this coming week or the next week, it will probably go down. You know, especially when you look at oil, the move, let's go back, the move from the highs of around $77, about $80 oil, is now trading under $50. That's very huge. And this huge decline will not last. At least for the short term, expect some type of relief. And this relief can have an effect on Canadian dollar, which can strengthen it, increase the value of the Canadian dollar. So that's it for this video, and I hope you enjoyed it. Good luck with your trading. Thank you everyone. Bye for now.